Welcome back to the Dividend Diplomats YouTube channel, everyone. Lanny, Bert, who are we? The Dividend Diplomats, everybody. Today we're going to talk to you about 3 dividend aristocrats that are REITs, which means one thing, Lanny, higher yields typically for REITs. So we're going to talk about 3 high-yielding dividend aristocrats.
Guys, before we dive into 3 dividend aristocrat REITs, give us a nice subscribe, hit that thumbs up on this video, guys. Again, this industry is taking a lot of a beating right now because interest rates are rising, which pushes down a lot of valuations because a lot of debt means a lot of concern.
Yes. So with this, we wanted to cover this because with the concerns that are coming up with a potential recession, with people looking at the market and the wild swings every day. Yeah, recession. Just makes you think of Austin Powers. But anyway, this is why we are long-term dividend growth investors. We want to see these companies that have increased their dividend through good times and bad. And what better way to do that? What natural way to filter out some of the hit that mark than by looking at dividend aristocrats. Aristocrats are companies that have increased their dividend for 25 consecutive years. So that means they've increased through the pandemic, they've increased through the global financial crisis, the dot-com boom, and is that on the fence of what the Gulf crisis? And I think that's where it cuts off for aristocrats, right, Lanny? And this was past SNL crisis of the 80s.
It was, yeah. We're in the 90s now, essentially. So, guys, when really we want to talk about this because it's an interesting topic. REITs are pretty popular. People like to go for some yield. These aren't going to be the highest yielding REITs you see. They're actually all under 6%, with only one pushing over 5%. But as these companies, these REITs take on debt to buy properties and to manage cash flow, debt's becoming more expensive because interest rates are rising. So the stock prices on these 3 companies are all down, some down over 30% this year, which has pushed the yield up. And, it's time to look at these 3 REITs to add a nice boost to your passive income total in your portfolio.
Yeah, and I think that's an interesting observation about the yield on these REITs. And it's something that I noticed too when we were putting this together. And maybe that's been part of the key to the success for why they've been able to continue increasing their dividend and why they earn that aristocrat status. Because so many REITs have 8% yields, 10% yields, which are great when times are awesome. Yeah, oh yeah, some of them are insane. But to your point, a lot of debt, not always the cheapest debt. So when times get tough, when their occupancies dip, when other issues start rising, interest becomes more expensive and they have less free cash flow to pay out a dividend, you can't sustain it. So these companies have managed for 25 plus years to build a sustainable dividend that's not the highest, but it's well above the S&P 500 and well above your high yield savings accounts today.
I agree. And so, guys, we're here to talk about 3 stocks. We're going to put them through the Dividend Diplomats stock screening metrics. Instead of the price to earnings ratio, we're going to look at funds from operations, or FFO, because really that's how you evaluate REITs from a valuation standpoint. So we'll focus on 1, the price to FFO ratio, 2, the dividend payout ratio, 3, dividend growth, and then we'll look at the yield as a bonus metric on all 3 REITs.
All right, everybody. So let's jump right in. We're going to talk about them. We'll just go through each one of their metrics and just keep moving along to the next one. This first REIT is the one dividend king from the list. This company has increased its dividend. Yeah, 50 plus years increasing its dividend. This company is REIT, Federal Realty Investment Trust, ticker symbol FRT. Brief description. What I thought was interesting about this REIT, when you'll see it compared to the others, they don't have a ton of properties on their books. They only actually own on their website 105 properties, and they're on the coast and in Chicago. So they're in the major cities, major metropolitan areas. The properties that they have, they focus on. They get those big, high quality retail. The ones that have like your TJ Maxx's, your big grocery store anchors, all those big developments. That's kind of their target market now. Those large mixed use properties that have strong retail anchors. When you think of when you're trying to picture FRT, just picture going down the highway, going to one of your major shopping areas and seeing one of those places. That's what they target. That's the type of place they target.
Nice, nice. And yeah, as of the timing of this video, they're trading at $91.94. And man, Bert, looking at that first metric, that funds from operations, looking pretty decent. Right now they're expecting $6.30 in FFO. So the price to FFO is about 14.59.
Yeah. Looking at that payout ratio here, their annual dividends $4.32. Divide that by their annualized FFO is 630. It's a payout ratio of 68.57%.
And guys, just for a frame of reference, maybe people might wonder, oh, do they pay monthly? Do they pay quarterly? This is a quarterly dividend REIT.
I wonder why you're bringing that up, Laddie.
A little sneak peek, but guys, let's look at that dividend growth rate. Bird mentioned there are dividend king. They're actually, even beyond it, they're 55 plus years of increasing the dividend. So guys, you think there's a big dividend growth rate here? The 5-year average is about 1.72%. So it seems like they do just enough to keep that growth streak alive.
Yeah, so let's look at the yield, because hopefully if they have a lower dividend growth rate, the yield's at least getting a nice return for it. Their yield is 4.7% at the time of this video. So let's summarize here the FRT and then move on to the next one. Price per FFO, 14.59, 68% payout ratio, 1.72% 5-year DGR, increase for 55 years with a yield of 4.7%. Lanny, who's number 2 on this list?
Oh, the newly minted as of a couple of years ago, Realty Income, ticker symbol O. The O, everybody here is making the O face. Give this video a thumbs up if you own Realty Income in your video. We know everybody's out there buying and scooping up Realty Income, especially when they're trading below $60 per share, because guys, they're trading at $58.52. And Bert, what's that first beautiful metric look like for Realty Income?
All right, their FFO is 4.04. Price per FFO, 14.49.
Slightly below FRT, but how about that payout ratio?
Their annual dividends 2.98. Payout ratio is 73.76%. So not bad.
Cream rises.
Yeah, it seems like it's always the same. I feel like we could have taken a snapshot of a Realty Income like 5 years ago and it would have been the exact same. So let's look at the dividend growth rate. 5-year DGR, 3.94%. Increase that dividend for 25 years. You mentioned they just became an aristocrat. So they've increased it every single quarter since they became a public company. And trust it. And you go to their website, they let you know. They let you know that they increase their dividend very frequently.
They pay monthly. Everybody loves that about Realty Income. You get that monthly, landlord check in the mail from Realty Income, guys. And that dividend yield is better than FRT. Right now, Realty Income, again, ticker symbol O, sports a 5.09% dividend yield. So very solid, very good with that growth rate of almost 4%.
Yep. And just a quick background there. Freestanding units. They have retail, industrial, ag, over 11,000 properties under their thing, and they operate in all 50 states. So about probably as polar opposite from Federal Realty Investment Trust as you're going to get. So it's interesting. 2 completely different style REITs are the first 2 aristocrats.
I couldn't agree more. All right, guys. So again, 14.49 PE, 74% payout ratio, 4% DGR, 25 plus years with a yield over 5%. But Bert, there's a third Dividend Aristocrat real estate investment trust here you're about to dive into.
Yeah, if you haven't heard about this one, can't blame you. I didn't really know that much about this one before we started. I'd heard the name, but it went in one ear, out the other ear in the past. This company is Essex Property Trust, ticker symbol ESS. So we mentioned FRT, one type of
sports. It's in the game.
Yeah. FRT, major shopping, Realty Income, individual properties, Essex, apartments in a few cities on the West Coast. So LA, San Francisco, California, and up in Seattle. So a completely different style REIT that also is a dividend aristocrat.
Guys, I like it. Currently trading at $228.69 as of the time of this video. The funds The funds from operation expectation right now is $12.98. So they're actually on the higher side on that FFO ratio here. Price to FFO, it's 17.62 for ESS.
Annual dividends, $8.80. That gives you a payout ratio of 67.8%.
So lower than the other two, just by a little bit at least.
Yep. Their 5-year average dividend growth rate's 4.87%, and they've increased that dividend for 27 consecutive years. So they are a newly minted dividend aristocrat, just like Realty Income.
Wow. All right, ESS, and they've got a current dividend yield of 3.85%, and the stock is down 35%. So yield of 3.85%.
So to summarize, 17.62 price to FFO, payout 67%, 5-year dividend growth rate 4.87%, increase for 27 years with a yield of 3.85%. So there we have it, everybody. 3 REITs that are dividend aristocrats. Of this list, I own one, Realty Income. Nibbled with FRT and looking at it in the past, but never bought, and honestly never considered ESS before this video, and I'm probably not going to consider ESS right now after this video.
And guys, for those that are curious, does ESS, what frequency do they pay a dividend on? Do a quick double check, discount that.
Oh, that's a
ESS,
reference right there. That discount double check.
they pay quarterly, so just an
All
FYI
right.
in the guys. And I also own Realty Income. If you don't, Realty Income is at a great value right now.
Yeah, that's the one that jumps off the page to me. I should probably be nibbling and adding a little bit more to Realty Income in there. I might do some portfolio cleanup in my Roth, take some funds here that would move it into my Realty Income that's already in there. If I had to pick between starting one between FRT and ESS, I'd lean FRT right now based on the metrics, pretty much in line with Realty Income.
Guys, how many of these 3 dividend aristocrat REITs do you own in your stock portfolio? Are you buying dividend REITs during a recession? Are these stocks to buy right now, or should you stay on the sidelines when considering real estate investment trust? Let us know in the comments.
And if you haven't already, subscribe to this channel, give this video a thumbs up, take those 2 seconds to do it, everyone. Thank you for that support. Let's go. Let's get to financial freedom.
Guys, that was Bertha Hurt and Lanny from the Dividend Diplomats. Over and out.